Hey all, welcome to ShareTreck. This is Raj here. It's another beautiful day and the market is looking good. But most of the genomic investors are thinking, did I invest too early in genomics? Is it genomics going to go bust or is it going to go for a boom? And when is the boom going to start? I ask myself the same questions, and today I'm going to present what I have found so far. I'll share my thoughts with you, and I'd like you in turn to share your thoughts in the comment section so that I can understand where you come from. With that said, let's get started. Welcome back, friends. Investing in genomics holds the promise of transforming healthcare and curing diseases that have been considered incurable for a very long period of time. There is this sense of magic to it, and also the concept of curing the root cause rather than the symptoms seems to be a superior approach. The potential of gene editing, gene therapy, and other genomic advancement is vast, with the market for next generation medicines projected to grow significantly in the coming years. I'm going to show a chart to you, which you can have a look at. So according to Global X analysis, based on Evaluate Pharma, the market for next generation medicines, which includes gene editing, cell therapy, gene therapy, DNA and RNA therapy, and also gene modified cell therapy, is expected to exceed 80 billion by 2028. The current market sentiment, despite the tremendous potential, is very lukewarm. And analysts have highlighted several key points that reflects this cautious outlook. If you look at the table out here, you will see that RBC has cut the price target for Verve Therapeutics from 35 to 25, while maintaining an outperform rating, but classifying it as a speculative risk. Editas Medicine also has the similar situation, with RBC reducing its price target on Editas Medicine from $11 to $8, keeping a sector perform rating and labeling it as a speculative risk. Oppenheimer, however, has maintained a price target of 12 per share, and RBC has also lowered its price target for Beam Therapeutics from $35 to $27, maintaining a sector perform rating and categorizing it as speculative risk. Guggenheim has assumed coverage of CRISPR Therapeutics, but has not given a price target out here, and it's giving it a neutral rating. Imagine if CRISPR Therapeutics is going to get a neutral rating after the success of Casgevy and having two fully owned CAR T-cell therapies which are allogenic and in advanced stages of clinical trial, and having a gene therapy in advanced stages of clinical trial for diabetes. I mean, what do you think the market sentiment is like? It's terrible. And Needham has maintained a price target of 88 per share for CRISPR Therapeutics. RBC has cut the price for Illumina from 249 to 242 per share. And similarly, it has decreased the price target for Caribou Biosciences from $19 to $14, while keeping an outperform rating and considering it a speculative risk. But if you look at the market price of all these securities, it's way below whatever is given as the new modified lower price for these stocks. So the market realities are mixed, and often cautious outlook from analysts indicates that while the potential for genomic advancements is high, the current market is not particularly enthusiastic about those investments. And several factors contribute to this sentiment, including the high risk associated with early stage biotech companies and the availability of often less risky and highly rewarding opportunities in the market. For example, if you put money in any of these AI companies, you may overnight get 10% return. So there is a speculative attraction as well, where people like to put money there. I personally have taken money out of CRISPR. I took profits from CRISPR and I have deployed it on AI, and I have not yet bought it back into CRISPR. I might do that at a later date, but I am seeing that CRISPR has fallen way below my target price of $55 to $60, and there is prospect of it going down further. So why would I bring money out of a highly lucrative AI sector and put it into genomics? For investors, it is crucial to remember, I think, that the primary goal is to achieve targeted returns regardless of the specific sector or company. Therefore, it might be necessary to stay invested in the genomic sector and endure its volatility only if one is a long-term investor. If you are not a long-term investor and all you care about is to make money, there is no reason for you to stay tethered to genomic investment. When I look at the number of views our videos have in the channel, it has gone down from somewhere in the high 300s per video to 2 digits, and sometimes just about 3 digits. And the reason why is because people are really disappointed with genomics. They don't want to look at their portfolio and be reminded that there's a huge accrued loss sitting in their books, and they're tired of hearing about clinical trial results and this and that. They want to see the cash, like in one of those movies they said, "Show me the money." I forget what it was. It was Tom Cruise as a sports promoter. So I think show me the money is what genomic investors are asking, and very few companies are able to show it. And I would say that Illumina committed suicide or harikiri or whatever the Japanese call it by doing the Grail misadventure, and as a result their shares have fallen significantly. Whereas CRISPR Therapeutics, I think, is the most optimum gene therapy stock or gene technology stock out there, which has got a really good prospect going forward. And I think it can weather this period of lull for a longer time. Investing in genomics can be rewarding, but it takes patience, resilience, and a long-term perspective. For those looking for more immediate and stable returns, diversifying into less volatile and more predictable investments might be a prudent strategy. And that's why we have included AI into the portfolio out here, and I make videos on AI. In conclusion, I would say that while the promise of genomic investments is undeniably exciting, the current market sentiment and analyst recommendations suggest caution. The focus should remain on achieving targeted returns, and if the roller coaster ride of genomics is not suitable, exploring other investment opportunities is a valid and potentially rewarding strategy. For those with a long-term vision, however, staying in the course in genomics could eventually pay off as the industry matures and its groundbreaking potential becomes a reality. But remember, at this point of time, we have a very high interest rate regime. So if you stay invested for 2 years at the rate of 5.5% of depreciation of your money, then for you to get the money back when the share appreciates, it's going to take even more, because the true value of money is going down while you're waiting. So that's what I'm saying. I'm not saying stop investing in genomics. All I'm saying is that one has to be pragmatic, and especially if you're a retiree or if you're someone who is trying to build a nest egg, and if you're not a long-term investor, I would seriously question why you want to put your money in genomics. If you want to gamble, you can always go to the casino, and gambling with genomic stocks, I don't think it's going to give you as good a return as you might probably get in a casino where everything is stacked in the favor of the house. So that's my 2 cents about it, and I would like to hear your comments. With that, my friends, I would like to bring this video to an end, and I'll catch up with you again in the next video. Bye for now.